And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep. Today is Tuesday, April the 18th. My name is John Hoagland. Thank you for trusting me with your time. As always, we are going to focus on seeking accurate context, always thinking about risk management and remaining patient in our trading. If you are already in the markets, hopefully things are going your way. As always, we are looking forward to your success. Today, taxes are due. Today is officially the last day you can file your taxes. Oh joy. But we've got some interesting things going on in the markets. We're going to focus on that today. 7:30, the housing numbers came out. Housing starts a little bit higher than expected. Permits, pretty much lower than expected. The markets seem to be pleased by these numbers. Nothing big as far as reactions are concerned, but we are also waiting for 12 o'clock today. We have a talking Fed. Bowman is speaking. And we've got the equities higher this morning. Now, why are the equities higher? Some are saying positive GDP growth in China. Some are saying earnings. Some are hoping for slowing housing numbers. And I think they've gotten a little bit of everything that they were looking for this morning. Earnings this morning, Johnson & Johnson beating on both, Bank of America beating on both, Goldman Sachs beating on earnings, but a little bit of a miss on revenue, and Lockheed Martin beating on both. This afternoon, we're waiting for Netflix, Interactive Brokers, United Airlines Holdings, as well as some other smaller numbers. Not a big list, but some pretty powerful numbers, some pretty powerful companies. Crude prices have actually remained soft, even after good news out of China, which the good news out of China is an expectation of greater demand of crude oil. The API sees a drop of 2.5 million barrels the end of the day today, and of course we're waiting for the EIA numbers tomorrow for all of you crude oil traders. We've got some potential breakouts in some of these markets that weren't all that gratuitous, I didn't think, particularly gold. We're going to see this in the charts shortly here. As far as the VIX is down a little bit this morning, 16.9. Yesterday at this time, 17.7. The dollar index, 101.68 right now, down slightly after yesterday being at 101.62. So no major changes here in the dollar index. And the yield on the 10-year, a little bit lower this morning at 3.58, where it was 3.56% yesterday. As always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. And subscribe to our YouTube channel. You can get notifications when we do go live. Speaking of that, we are going live today at 11:30 with the Coach's Playbook. The subject we were thinking about doing, I'm not sure if this is what we're going to do, is do the stars affect markets? Should be an interesting one. And of course, right after the prep today, we have Make Hoag Money. I have put the link in so you can register for the Zoom meeting, or you're more than welcome to just watch it on YouTube as usual. Looking forward to an interesting morning here in Make Hoag Money. Hopefully, we'll bring some good trade ideas and make me some dough. Good morning, Scott saw, and he conquered this morning. First in the room, winning the prize. Crowing early here is the Rooster. Good morning, Rooster. Shaw, good morning, Tim. Will, why is the NASDAQ up 100 points? Well, there's a number of reasons it looks like. Excuse me, some in my eye here. Ground Zero, Buenos Coffees. Got my coffee right here. Just got a fresh hot cup here in my CME Group Yeti coffee cup that keeps coffee nice and hot for a long time. I always have to remember that so I don't burn myself. Randolph, good to see you this morning. Hopefully we'll get the chance to talk during Make Hogue Money. Love you, buddy. Timothy, Alejandro, Terry, good morning. James, Brian, John, Bill. Kevin, good to see you this morning. Charles, Chai T, Stephen Vander Vecken, John, good morning, Dr. VJ. Dan Trader, it's good to see you. Bear goes long. Lacey says good morning to everybody as well. Jason, Sarah Hall, prayers and love as always to you. Henry G, Larry, Will, good morning. Started to move up at 3 a.m. Yep. Cost, good morning. Philo, good morning. Trading Research, Data. Zach, good morning. Rusty Golfer, my spirit animal is here, the Rusty Golfer. Joe, good morning. Calm and composed. Very good, Joe. Ashraf, good morning. Ryan, Vince, good to see you, my guy. George, center of the universe, says good morning. Right back to you, George. James Hagel Matters, Trading Research. Travis, good morning to you. Jason, Dowitzer, Besweed, Snowflake, Pete, Austin, Don, Jason. Long yes overnight with a stop at 41.69 worked well. Nice job. Taurus Trader, Andy Bleed, good morning. I don't usually trade in the overnight, but Jason, you got a good one on, it sounds like, this morning, so let's keep that trend going, right? Again, Make Hogue Money right after the prep this morning. Taxes we know about. Unfortunately, that is a part of life these days, and we're gonna jump into the charts relatively quickly here. We want to make sure we have plenty of time to see what's going on during Make Hogue Money at the beginning here. So let's jump into the S&Ps. Good morning, Meritech. Good morning, Barry, Andy Bleed, Taurus Trader, in case I missed you. And here we go. This is the daily in the mini S&Ps. So we are continuing to hold upside structure. The auction continues higher. Volume was just all right yesterday. In the New York Stock Exchange, it seems that 3.5 billion has been the trend lately. It's been right around there for the last 4 or 5 or 6 sessions. So at least volume is at least maintaining on this push to the upside, and we did add 14,000 contracts in open interest on an inside day yesterday, but I would venture to say that the open interest increase came later on in the day as the market kind of pushed higher. And if it is open interest on shorts, those shorts are getting squeezed right now. So we can squeeze those shorts in the S&Ps, can't we? The auction grade I'm giving in this move up here, which kind of is leaving balance, I'm giving it a C plus for now. For now, I'm giving it a C+. We got to break out above that weekly kickoff high. We've got to take out these highs here, and then we'll see what the auction really looks like. There's a lot of money on the sidelines that I'd like to see get into this market for everyone's 401k and for all of you stock investors, right? So again, a C plus, only a C plus. I'm not all that impressed here just yet. Here's the 30-minute chart yesterday. Here's why I think that most of the open interest came to new longs yesterday. The market kind of drifted lower. The volume, I think, was better at the end of the day. And we kind of reversed all of the drifting negative delta and ended the day relatively positive as far as delta is concerned yesterday. Another reason I'm liking the upside to this market is because we did put in a late spike the end of the day yesterday. Overnight inventory is obviously long. We're going to be opening with a gap. Gap rules. If we don't close the gap relatively early, we're looking for opportunities to buy this market. Even a gap close can offer an opportunity to limit risk on the long side. We also have the base of the late spike, which is down here. It's a little bit more obvious on the TPO chart. Let's go take a look at it. That's not the TPO chart. This is. So we had a normal variation extreme day yesterday, extreme where the point of control was very low in both volume and TPO profiles. Market just seemed to run out of sellers, and maybe we found some buyers down there yesterday. We see here we have the late spike. The market settled at 76.75 right up here. We moved price higher out of balance at the end of the day, and we didn't have time to be able to accept price at that level through time. So that gives us that late spike. The base 41.73 quarter. 41.73 quarters where the market really started to leave balance and continue the move to the upside. Well, where is it now? Take a look at the TPO chart with the overnight. Overnight basically found support at the base of the late spike. Remember, there's nothing finite in futures trading. This whole zone here, it was a support level last night. Double distribution trend day to the upside last night. We're opening above the late spike with a gap and with some overnight longs. Might give us the opportunity to look for better trade locations for long with that overnight inventory to the long side. But it doesn't change the fact that the nuances with the gap, with the late spike, all the nuances are suggesting that price is being accepted at higher pricing. Until that proves wrong, where we find acceptance back inside the range from yesterday or inside the value from yesterday, I'm going to be kind of thinking of looking for opportunities to limit risk for opportunities to buy this market. It is going to be opening out of balance, out of range. Better trade locations may come early in the session. We'll keep that in mind during Make Hogue Money. But for now, the nuances are all pointing towards continuation to the upside. Remember, anything can happen. What's going on in crude oil here? Crude oil is in rollover. We have to remember that. It looks, by the way open interest is yesterday, adding 27,000 overall, but losing 30,000 in the May contract, that we may have added some pretty serious short bets in this market in directional trade. Again, this is very blurry due to open interest. We are now officially in a range-bound state, which is typical for rollover, as the longer time frame, bigger traders are trying to get a cheap rollover done versus becoming directional. They will become directional if provoked. Try not to poke the bear with the stick. However, if we did add open interest and we have new business shorts to the sell side here, last week's high, yesterday's high, are we going to continue this move to the downside? If we do, last week's low, weekly kickoff low, the lows from all of these shadows down here should be relatively difficult to get through. If we get through them, there is nothing but space till we close the gap down here to 75, well, almost 76. We could just call that 76, right? So there's opportunity here, but I'm going to be patient and wait for better opportunities, remembering its rollover. You should be trading the June contract. That's the M contract. Volume is certainly going to be greater in that today. Take a look at the 30-minute chart here. So we were kind of viewing this as a potential bull flag. That is now off the table. We are looking at a potential break in market state in longer time frame, but in the medium short time frame, we're still very range bound. Where did the market open up? It opened up here, bordering a gap, pushing lower. If we get the opportunity near weekly kickoff low, that would be a Very interesting opportunity for us. Look at all the lows we've got down there. We have a recent low in overnight session. We have weekly kickoff low down there. It's going to be an interesting opportunity for us down there. If we reject yesterday's range and value, which it looks like we're doing now, it was a double distribution day. We did not open between those two distributions. We opened outside of them. Maybe a pretty good chance of continuation to the downside. Take a look at this on the TPO chart. And this includes the overnight. Here's where we opened. Well, we actually have a gap, it looks like. It looks like we've created a gap here. We can't close that gap relatively early. The move is to the downside. We did not open between these two areas of consolidation, if you will, distribution of time and volume. We opened outside of them. There is a distinct possibility that the move will be to the downside. If we reaccept inside or between these two areas of consolidation or distribution of time and volume, then we fall into repair. Right now, the guess or the estimate is we're rejecting range from yesterday between the assumed points of control of this distribution and this distribution. We've closed the gap now. I don't know if the opening range is the low of the session. That could change things a little bit as far as where my interest in execution would be. Let's take a look here, take a quick look. Opening range, the low of the session. This is the May contract. Here's the June contract. Got to move those over. Opening range, the low of the session. As long as this holds, it may keep me looking for better trade locations for shorts. Probably looking for longs now because we did leave the opening range at the low of the session. So we're going to be patient here. If we're going to pull into the range from yesterday, we'll find better trade locations for longs. Shorts. What about the NASDAQ? The NASDAQ is a different animal. Okay, here's the range-bound activity. It is much different than the picture that the S&Ps are showing in continuation to the long side, although upside structure still remains here in the NASDAQ. Yesterday, we added 10,000 in open interest in the NASDAQ. That's a pretty big jump. Volume was just okay, but that jump in open interest has me wondering what direction. Okay, now this very short time frame upside auction, I've given a B minus, where we've got a C plus in the S&Ps. A lot of that is because of the amount of open interest that was added yesterday, and it looks like the volume held up pretty well. Take a look at the 30-minute chart. So we do not have a late spike. We had a normal variation trend day. We barely closed this market higher. Volume at the end of the day was pretty good. I'm looking at that 10,000 interest in that addition in open interest as new money coming into the long side. We've got the market with a gap, no late spike, remember. The gap has the overnight inventory long, but again, as gap rules go, if we can't close the gap relatively early, even upon a gap close, we may be looking for opportunities for longs. The fact that the overnight inventory is long may give us the opportunity to be patient and wait for better longs as the day goes on, but we also have to remember that opening outside of range and value early in the session may find the best trade locations. So while the nuances are to the upside, the auction process is saying to the upside, we may want to be patient, especially in the NASDAQ, looking for better trade locations. Here's the TPO chart. As I am a tough grader, I learned from some of the best. Normal variation day, extreme to the downside. There was a question yesterday during, I think, the group coaching. What does it mean when point of control moves lower? Well, it means the sellers are winning, at least for now. But look at where we closed. We closed near the highs. So some pretty serious buying came in against probably some shorter time frame traders that ended up short in the hole down here. And boy, they're hurting now. Take a look at gold. This is a fascinating market to me today. Why? Well, we had a market state break yesterday. We really kind of broke the upside market state. What I would have been looking for would have been an increase in open interest on a pretty decent down day. We lost a whole bunch of volume yesterday. Volume was weak. We lost open interest yesterday as well. So that's telling us that this potential new auction to the downside did not perform well. It got a D. It got a D. So the auction to the downside is a slacker sitting in the back of the classroom, looking on his phone, not paying attention to what's going on at the front of the classroom. It got a D. Well, we can certainly change that. It can start to pay attention, and we can change the open interest and the volume in either direction today. But just the fact that we lost open interest and volume yesterday has this little break that we saw feeling very hollow. Now, it's maybe just falling into range-bound activity here now. We see that last week's low ended up being our low from the session yesterday. What about the 30-minute chart? What are we seeing here? So there's excess at the bottom of this profile. We had a IB high. Well, we'll see that on the profiles. Looks like the opening range was the high of the session. So we were looking for shorts the better part of the day, but the market did kind of recover. We had some of the biggest volume as the market turned direction. So the downside was very weak as far as volume is concerned. Let's take a look at the TPO chart and see if that helps us at all. So the IB was the high, opening range was probably the high. We have a little bit of excess at the bottom of this. It's a double distribution trend day opening above the upper point of control of the upper distribution. We're testing down to that now. We could easily test down to the point of control from the lower distribution. It's not that far, but I don't think it changes the idea that the auction to the downside yesterday did not perform well. It was a weak downside auction. It didn't bring in volume. Nobody cared that price was moving lower. It's a hollow break. Anything can happen, of course. We all know that. Keep your eye on the dollar today. If the dollar gets some legs under it, then we'll be cautious looking for longs. But the weak auction to the downside yesterday has me really thinking about where I would be looking for opportunities and in which direction. Euro holding the line here, holding the line. Still upside structure. We again lost volume on this push down, similar to gold yesterday, and we lost open interest. So this pushback that we experienced yesterday did not bring in new business. This is old business. We need new business to create market state breaks. The pullback to the trend line, low volume, lower open interest, weak, hollow. Take a look at the 30-minute. So this was a pretty decent break. I mean, it was a long liquidation break. It did not bring new business. It took care of old business. The market, pushed lower, quickly consolidated at the low, longs trying to get out. That takes selling power away from the market. Where are we today? Overnight inventory to the long side, somewhat reconciled. Above value, potential for repair. We've got the point of control down here. We've got the point of control down here. Not sure which one it's going to hit, but it's likely to target one of them today, if not both. Take a look at the TPO chart. Hello, Mr. Dolby. I was talking about my high school career too. But I wasn't on my phone. We didn't have them then. So here's that B-shaped long liquidation, loss of open interest. Everything says that this auction did not do well. It did not bring in new business. We've opened above value, below points of control. Here's the TPO point of control here. Keep that in mind. This could be an interesting spot. And then we've got TPO and volume points of control down here. It's going to hit one, if not both, if not all three of these points of control today. These are the visual areas. All right, so I'm looking to see if I have anything else here. Let's look at the 10-year. So the 10-year broke out, a market state change, continued that market state change to the downside on relatively weak volume, but at the very least we did add 15,000 in new open interest, new contracts yesterday. On lower volume, yes. Up against a support level, yes. Weekly kickoff low gives us opportunity a go-go today. It's been supportive. If we accept below it, there is space below. What are rates going to do in 2 weeks? That's really the question. Here's the 30-minute chart. It's going to show us back here down near weekly kickoff low. Look at how weak this low is, this overnight low. 4 exact lows. Exactness in trading is a weakness. I'm going to be looking forward to an opportunity towards weekly kickoff low here today, if only to have the opportunity to limit risk. The market opened in range and in value. There's no hurry to get into this market today. Let it come to a level that lets you limit risk before executing today. Took out 2 points of control yesterday on this push to the downside. Support possibly here. Be patient. Be patient, Iago. And our little pet project here, natural gas, we had a weekend gap. That weekend gap still remains unclosed. We're trading up to and almost exactly to weekly kickoff high. As a matter of fact, exactly to weekly kickoff high. 34. 9 ticks over it now. We lost 12,000 in open interest yesterday. Short covering. A lot of shorts in this market. They got squeezed out yesterday. That takes buying power away from the market up against an important inflection level. Resistance. That weekly kickoff high is certainly in play. Here's the 30-minute chart. Last week's high, support. Weekly kickoff high, resistant. Which one's gonna break? Here's our weekend gap. Here's our push and then our just really deep consolidation yesterday. Market just really worked all day at accepting price at this level. Very narrow, very small range, very wide profile. This is going to be a very prominent point of control if it wasn't already rechecked in the session today. Inside the regular trading hour range yesterday, I got to stay patient here. Got to wait to see if I get an opportunity at our overnight high, at the weekly kickoff high, or if we start to see this weekend gap begin to close. What a strange but wonderful market the natural gas is. I don't have the intestinal fortitude really to trade it. It can be a real widow maker. So sure. No, we could not carry a rotary phone to school. Ah, my goodness. Good morning, Michael, Shaw. It's good to see everyone. Andy, thank you for helping Larry there. He probably knows more about the Trading View platform than I do. I know our guy Nick Dolby does. Larry, if you want to join our Discord community, they probably get some help for you there as well. But let's take our deep breath and be ready for the trading day today. Going to stay humble, grateful, creative, and centered in my trading today. Looking forward to seeing everybody at Make Hogue Money. If I don't see you, have a great trading day. Don't forget about the Coach's Playbook today at 11:30, and certainly don't forget about Thursday at 3 o'clock, the Q&A with Top Step founder and CEO Michael Patak. Looking forward to seeing you all there. So trade well, be kind to yourself, be kind to others, say a prayer for peace. We know we need that, and I'll see you in a little bit. Have a great day.